Hi everybody, and welcome back to another QuickBooks tutorial. This tutorial we are going to look at how to create a journal entry inside QuickBooks. This is a follow-up tutorial to the previous one where we learned how to calculate an amortization depreciation expense using the declining balance method. And we used an example, the example that we used in the prior video along with this one will be the same. We're going to use the Ford truck that the company purchased for $28,750. And we can see that on our balance sheet right here, $28,750. Also, we had previously set up a sub-account to this truck to total the accumulated amortization against the Ford truck. And what these sub-accounts do, these accumulated amortization accounts, they will continue to total all the depreciation that we expense over the years in a pool, and then below will give us a net, like a total Ford truck, or actually the net book value. So in other words, the balance in this row here will be the amount of the original cost minus the amount of depreciation that we expensed against it. So let's get right into creating our first journal entry. We're going to create a couple of examples. To create a journal entry in QuickBooks, we go up to this little plus icon in the upper right-hand corner and select it. And then in the other column in the far right, we simply select journal entry. As with any other entries we're making in QuickBooks, our first thing we want to make sure we're doing is posting to the correct date. And for this example, we're going to use, we can use April 2nd, 2018. Now the first account that we want to pull up is the amortization depreciation expense account that we created. So if we just start typing in the account name, it should pop up here. We can see amortization depreciation expense account. And the amount that we're going to write off, or expense rather, is the amount that we calculated in the subsequent video. And we had determined that the first year depreciation expense amount was $4,312.50. And under description, we're going to type in first year amortization. Depreciation expense. And then you see we've got our debit in here. So of course, with all accounting and bookkeeping entries, our debits and credits have to balance. So our second account that we're going to impact is that sub-account of the truck, and that is the accumulated amortization right here, accumulated amortization Ford truck, and it tells you that it's a sub-account of the Ford truck. Now some of you may have this set up as property, plant, and equipment. Others may have set the truck up as a long-term asset. Either is fine. So now we've got our date, and we've got our amounts and the general ledger accounts that we want to impact. We will hit save or save in new. Our entry is now saved. And now we want to go back onto our balance sheet and look at the impact that our entry just made to make sure that everything recorded correctly. So now if we go back and take a look at our balance sheet, we can see that it has, again, our Ford truck, the original cost at $28,750, the amortization that we just posted of $43,1250, and now our total, or rather our net book value left to be expensed is $24,437.50. So that worked out correctly. So let's just try one more example, and we're going to post year 2 of the amortization expense against the truck. So once again, we'll go up to this little plus icon. This is where we go when we want to make a journal entry. And in the other column, we select journal entry. I'm just going to leave the date the same because this is, more importantly, this is to show you how the journal entries work and the accumulated amortization accounts. So once again, our first account is the expense account, which is the amortization depreciation expense account. And we calculated in the previous tutorial that the second year amortization was $7,331.25. Now again, we used a rate of 30% using the declining balance method. So we just took the 30% times the remaining balance from our balance sheet, which was $24,437.50, and that's where we got our $7,331.25. If you need to, please go back and check the video on how to use the declining balance method to calculate amortization, and make sure that you understand how that works. And then in description, we'll just put in year 2 amortization, depreciation expense, and our credit account again will be the accumulated amortization of the Ford truck subaccount, and there it is. Now after I hit save on this journal entry, what we would expect to see is a $28,750, the original cost, and then our accumulated amortization amount. The total of that should be $11,643.75, and that is a result of this $73,31.25 that we're posting for year 2, added to the first year amortization expense of $43,1250. So let's post this and check our balance sheet and see how everything turned out. So that journal entry's been saved. I'll close that down to go back to my balance sheet, and we take a look. And yes, so we can see everything has been recorded and captured correctly on our balance sheet. Here's our Ford truck with the original cost of $28,750. Our accumulated amortization for the truck is now up to $11,643, which leaves $17,106.25. That's the net amount yet to be written off. So when we go into year 3 to calculate our year 3 amortization depreciation expense, we would then take this balance of $17,106.25. We would multiply that by 30%, which would actually give us $5,131.88, and we would just create a journal entry for that. On a last note, typically a good practice is when we're booking these depreciation and amortization expenses, it should really be done on a monthly basis, because you will be closing your books every month to review your balance sheet and your income statement, to check your profit and loss and all your expenses. And all that's really involved there. The journal entry process is exactly the same. We would just, rather than post one entry for the entire annual amortization charge, we would calculate the total and then just simply divide it by 12. So I hope that's been helpful. And again, please refer back to the previous tutorial on how to calculate the declining balance method amortization amount if you need to. Bye for now, and we will see you soon.